All right, what's up, traders? Welcome back to the channel. Let's go ahead and discuss Bitcoin a little bit and some other markets real fast. Basically, you can see that we tagged 2022's yearly high and then rolled over, and volume confirms the fact that it rolled over. However, it did hold right here yesterday at the weekly support level. I do have a small support line drawn in right there, but this is weekly support. I'll go out to the weekly time frame and show you real quick. It's just from this candle right here. That seems to be holding as support for now. But yeah, we were expecting a pullback to happen, and it appears that we have gotten that pullback for now at least. Currently on a Saturday trading under the 2024 yearly opening range. We'll see if this is able to continue to roll over or not. Now, even though it did hold weekly support yesterday, every other market was extremely bullish yesterday. Except for the dollar. Let's go take a look. All right, so as you can see, the dollar is struggling at 2023's yearly opening range right here. Not only is it struggling based on 2023's open, it is also struggling based on the 100 and 200 EMAs. We were kind of expecting the dollar to either break out here or roll over. This is a very good spot for the rollover to happen. Another thing that we were watching is the yield curve inversion. All right, so let's go over here. Let's get rid of the moving averages, as we do not need the yield curve inversion moving averages for that. You can see the 10-year 3-month, which was bearish the last time that it moved up. It did cause the markets to pull back. However, that could have been due to other factors, as we are seeing this thing move up here now, which is causing bonds to fall. Here is that pullback on the TLT, and the market is ignoring that fact. So let's go take a look at the S&Ps. We got fresh all-time highs happening on this, which is, just basically a CFD product. Here is the actual S&P 500, and you can see this white line here. This is your all-time highs. So yeah, this week was a pretty exciting week as we traded all the way down to the weekly expected range lows, and then we bounced. And I actually posted this on Twitter so that way people would not jump into this thing short down here, thinking that we were going to continue to roll over, even though we are seeing that 10-year 3-month yield curve move back up to the upside. So the reason for that could be a bear steepening as far as the reason why it's moving up, and that's usually bullish. So basically what that means is the longer ends of the curves are moving higher than the near term. So that's kind of bullish for the market. It's whenever the near term moves higher and the long term either goes down or stays the same, that is a bearish signal. So be very, very careful when watching the yield curve inversion and trying to get short based on it. Here is the 10-year, 2-year yield curve inversion. You can see that it is pretty close of getting uninverted. But like I said, there's a lot of factors that will determine whether or not this will be bearish in the future or not. A lot of people are expecting a recession in 2024, and there's a lot of people who are not expecting a recession in 2024. So just be careful out there when you're trading. Make sure that you're taking both sides of the market. You can simply do that by getting long, say, the IWM, and then trying to sell calls if you wish, thinking that the market's going to roll over. But as long as the steepening is a bear steepening, then it will be bullish for the markets. If it ever becomes a bull steepener, that would be a bearish signal. I know it sounds exactly opposite as what it should be. Unfortunately, that's just the way these things work. But here, once again, the 30-year, you can see that it is moving higher, right? That is a bear steepening. 20-year moving higher, 10-year moving higher. So it's not just the 2-year moving higher. You can see that the 2 years only been moving higher for the last 1, 2, 3 days. Whereas if I go back to the 20-year, it's been moving up for multiple days. So this is what is classified a bear steepening, and that is why the markets are not rolling over. All right, moving back to Bitcoin. As of right now, we're expecting it to roll over again, but it's one of those things, right? We are under the 50 on the daily, and we are under the 21 on the daily. So typically we do start to look to short things. Once that occurs, you can see that we tested the 21 exponential perfectly here, rolled over, broke below this support, but this support, this weekly support, and this day support right here are still intact. So until we break below that, then we're probably going to chop around, maybe trade back up to 43,148, where I would expect resistance to come in. If we do break above this resistance, then I would watch 44,972, this level up here, to be the next level to look for potential bounces from. If we do break down, where is the next level that we're looking for Bitcoin to potentially find support? Well, it would be this resistance level right here. If I pull this up real quick, you'll see that that price is 37,885. Yeah, because that was the last resistance level on the daily time frame before we had the bullish push higher. So if we do lose this support right here, we could see Bitcoin trade all the way back down to 37,885. But like I said, since every other market is bullish and breaking out to the upside, making fresh all-time highs, Bitcoin could potentially find support here. One other thing about the S&P 500, it tested the 21 exponential and then boom, 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 3 days straight up. That's not a bearish signal. So I wouldn't be looking to short the S&P 500 just yet. As like I said, we do have the yield curves uninverting, and usually when that happens, it takes at least 3 to 4 months before it starts to fall, or it has in the past. And past performance is not indicative of future results. Here is the euro. Actually, I was looking for a short yesterday, but as you can see, it held support. Right there is the support level. And it traded down, closed back above. Yesterday, we were under it, but then we finally got the bullish move to the upside. It is still an inside day, and it is still structured bearish. But if it gets back above the 50, then we will be looking for bullishness. We'll be looking for that move to the upside. All right, so just be careful out there. I know a lot of people are very bearish this market. It's basically because they don't understand how to read the yield curve inversion and to tell whether or not it's a bearish or bullish signal. But I will put this on one more time just to kind of show you what's going on here. Let's compare the SPX, and you'll see what I'm talking about. So the last time it was bullish, when we had this run up here, you can see that the markets did in fact roll over. But then when it came back off, that was very bullish for the markets. And the fact that we've been moving higher, we were looking for the markets to roll over, maybe come up, find resistance, and then roll over again. But like I said earlier, it's a bearish steepener, not a bullish one. But in this case, bearish means bullish. It's bullish for the markets, but bearish for bonds. All right, it's bullish for the market, but bearish for bonds. That's why it's called a bearish or a bear steepener, because it's bearish for bonds, not the markets. The markets are loving it, as you can see, fresh all-time highs. Now, with that being said, if it does change and this does become a bull steepener, once again, that would be a bearish signal for the marketplace. And what that means is we would expect the 10-year 3-month or the 10-year 2-year to continue to rise as the markets roll over. But what we would need in that case is we would need the longer end of the curve, the 10, 20, and 30 years, to basically either go down or stay stagnant as the near term 1 month, 3 month, and 2-year yields rise. I know it's very confusing if you are a new trader, but it's just the way it works. You guys have a fantastic rest of your day. We will try to be live Tuesday. Obviously, it's when the internet gods allow. So we'll see you the next time we see you. Thank you so much for being here. Make sure you guys have a fantastic weekend. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.